What's going on, guys? Welcome back to PNL Live. I just wanted to do a little video really fast, little live stream. This isn't going to be trading. This is going to be some news that I just saw on Bloomberg, which was definitely worth a stream all on its own. So Danielle Dixon was just on Bloomberg the other day when the Senate was voting on the Genius Act, the Stablecoin legislation, and she was brought onto Bloomberg. So I want to do a quick stream really fast. Danielle Dixon is the CEO and executive director of the Stellar Foundation of XLM. And as you guys may or may not know, XLM is partnered with MoneyGram. They're compliant with the new SWIFT ISO 20022 banking standards, and they're going to be one of the utility tokens that are going to be used in this new financial system here coming up as soon as everything goes live with FedNow, with the banking messaging standard, etc., etc. So I'm going to go ahead and play this and let you guys listen.
One of the companies launching a stablecoin is PayPal. It's going to live on the Stellar blockchain for real-world payments, commerce, and financing. Let's bring in Danielle Dixon, CEO of Stellar Development Foundation. Danielle, always good to chat with you. I want to start with the ease of use question, because I think this is where really the rubber meets the road when it comes to consumer behavior. Consumers want to do what's easy. They want to do what has consumer protections, and that's credit cards. They want to do what they're rewarded for, and they're used to that when it comes to credit cards. Talk to us a little bit about the opportunity, though, that stablecoins present from a consumer perspective.
Well, if you think about now, and thank you for having me, if you think about where we are now in the blockchain crypto space, there's a lot of focus on ease of use for the consumer side. That wasn't the case 4 years ago. It is the case now. The wallets that people have built and businesses have built out there are really simple. So it actually is very easy to be able to leverage a stablecoin, sometimes not even knowing that you're doing that. And importantly, credit card companies are coming in and they're having relationships where you can actually use a credit card and then use your stablecoin through the credit card. So there's no conversion that you have to make. You can just deplete your stablecoin balance using your credit card. So I
want to bring up that point that she just said, because all of this, a lot of people don't realize, is going to be happening on the back end. So just the same way that you're going to be using your card, there's no conversions. You're not going to have to go to any decentralized exchanges, centralized exchanges, no crypto.com to be able to make any purchases. You're just going to be able to do it directly from the back end through the bank. So I just want to make that point really fast before we go ahead and continue.
I actually don't agree that there is a challenge with respect to ease of use. There was 3 to 5 years ago. There isn't today.
I just want to jump in. I know Shonali has a bunch of questions, but this sounds more difficult than swiping a card, than paying the bill at the end of the month or paying whatever you can afford to pay. Going and filling up some sort of wallet, then keeping track of how much is in it so it doesn't get depleted too quickly. Like, that sounds more difficult from a consumer perspective. Again, I'm talking consumer behavior. We want to do what's easiest as consumers. Convince me that stablecoins are the right way.
Well, I think a lot of people use their Venmo to do exactly what you just talked about. A lot of people are using PayPal to do exactly what you just talked about, and that ease of use in leveraging stablecoins there is kind of the same. So I think what Emily said before in your last segment is that outside the US, this is actually going to take off pretty quickly. It already is. In the US, it's a little more complicated because our markets, we're just used to what we have to do here because it's very simple. But I don't think.
Now, once again, pay attention to what she said, because all of that is the same way you would use MoneyGram or Venmo or PayPal now. You have a wallet just on there, just like you would have a hardware wallet. You'd have your ledger or anything like that set up on your phone. It's just an app. So all of this is going on in the back end, and the ease of use is what she's arguing is not going to is what she's saying is it's not going to be much different than your normal banking app that you have now.
The ease of use of it is going to be the challenge and the barrier to entry.
You know, I actually have a question in the exact opposite direction, and it's, you heard us.
You're saying it's too easy, Shonali?
Well, it might be easier for big retailers, as we've been talking about, to maybe bypass the traditional financial system in some ways by going directly to stablecoin. How likely is that? Now, it's really interesting to see you work with a more traditional way payments company. PayPal has been thinking about stablecoins for a long time, but if you are Bank of America or Citigroup, how worried do you have to be that, retailers might not want to work as directly with someone like you?
Well, I don't think I think that what we're seeing now is this really nice combination of traditional financial infrastructure and the new technology. everybody gets very fearful of this. And I think this has been the challenge that we've had for the last 10 years, is really getting people to understand it's just a tech stack. And so banks are actually really excited about leveraging this new technology. And I think if you look at PayPal, PayPal entered the market with a stablecoin during a time when there wasn't the Genius Act and stablecoin legislation on the table. And they did it because it was actually very useful for their consumers, but also from a business standpoint, it makes a lot of sense. So I think you're seeing traditional financial infrastructure really move to the value of what this technology has to offer, which is exactly the move that should be made.
I guess what I don't...
So remember, huge partnerships in crypto. That's not even anything new. JP Morgan has already been in the game. Wells Fargo, Chase Bank, Visa, MasterCard. This is all establishment people that have already been early investors in all of these banking utility tokens. This is on Bloomberg TV, mind you. This is on Bloomberg TV right now. We have a CEO and executive director of a crypto company on Bloomberg talking about this is coming.
Necessarily agree with is that it's just a tech stack, because if these are, yes, they're assets backed by dollars, but they're held differently than you would hold assets in a bank account, and that's the difference, isn't it? At the end of the day, these look a little bit more like money market accounts. So isn't that creating a different way for people to use money?
Well, so there's the U.S. Treasuries that are, if you think about, like, Franklin Templeton has issued a money market fund on Stellar. They have that, and they have access to that to be able to build your wealth and to get the interest rates that you can get. With the U.S. Treasuries that are, if you think about, like, Franklin Templeton has issued a money market fund on Stellar. They have that, and they have access to that to be able to build your wealth and the U.S. Treasuries that are, if you think about, like, Franklin Templeton has issued a money market fund on Stellar. They have that, and they have access to that to be able to build your wealth and to get the interest rates that you can get. With respect to stablecoins, it really is just about the velocity of the asset. So I actually think that it is very similar to holding in a bank account outside the U.S., because lots of folks don't have bank accounts that we're used to having. In the U.S., yeah, you're going to want a bank account, but you're also going to leverage stablecoins for ease of use and
money.
Well, so there's the U.S. Treasuries that are, if you think about, like, Franklin Templeton has issued a money market fund on Stellar. They have that, and they have access to that to be able to build your wealth and to get the interest rates that you can get. With respect to stablecoins,
Franklin Templeton issuing treasuries and money market funds on the Stellar network. So I just wanted to breeze past that really fast. Denell Dixon on here saying that on Bloomberg TV. Let's continue.
it really is just about the velocity of the asset. So I actually think that it is very similar to holding in a bank account outside the U.S., because lots of folks don't have bank accounts that we're used to having. In the U.S., yeah, you're going to want a bank account, but you're also going to leverage stablecoins for ease of use and for the fees to be so much lower. It's super exciting where we are in the market right now, and I just love to see this kind of technology really take off.
Perhaps exciting for somebody like you in this position, maybe not so exciting for an established credit card processing company like we saw on Friday. Shares of Visa and MasterCard did move lower on that Wall Street Journal report that we've been referencing that says that Amazon and Walmart are reportedly looking at their own stable coins. Talk to us about who you see as the, I don't want to say Say losers, but there's no other better way to put it. Like,
right, who should be aware?
Yeah, who should be concerned with developments in stablecoins such as these?
Here's what I'll say on that. I think that Visa and MasterCard have been actually working with this tech stack for a while now and trying to figure out how they're going to make their move and leverage the tech stack. Visa's done a really nice job with respect to partnering with Bridge and Stripe and to be able to make those credit cards that I was mentioning before. MasterCard is looking at digital identity. They're all trying to figure out.
You guys hear what she's saying right there. So even though these stocks are going down, Visa and MasterCard doesn't care. They already have their hand in the pot. They're already big investors, early investors in a lot of these big utility cryptos. So yeah, just pay attention to what she's saying. On Bloomberg TV here.
How they can use this technology to make it easier for their consumers and for their businesses. I don't think that there's going to be a loser, but there's going to be shakeups. And I think that this is good from the financial industry standpoint, because the consumer ultimately is going to be the winner, and that's what we want to see.
Stellar Development Foundation CEO Danelle Dixon, we thank you so very much. Of course, we're watching that stablecoin bill as it looks to pass through the Senate. Now, in un-crypto-related news, we do want to mention a post that was sent just really a number.
Now, I'm going to skip ahead really fast because this was something else that was said on this same exact program. And it was huge. Huge. What was just said in Congress. Of course, we got a commercial. Sorry, guys. Jeez. Whole 30-second commercial, really? We gotta sit through the whole thing? Are you being serious? Jeez. Now, this is big. I want everybody to pay attention here. I'm just gonna let this play.
Create a market that will expand U.S. dollar usage via these stable coins all around the world. And I think that $2 trillion is a very reasonable number, and I could see it greatly exceeding that.
Big projections from Treasury Secretary Scott Bessent.
Or T-bills.
That's huge. Scott Bessent, the Secretary of Treasury, just said a conservative number for stablecoins is going to be exceed $2 trillion. Putting the market cap of the entire crypto market up there at close to scraping $5 trillion for a market cap. Let's go back and listen to that one more time. Let's just go back and run that back really fast.
Stablecoin legislation backed by U.S. Treasuries, or T-bills, will create a market that will expand U.S. dollar usage via these stablecoins all around the world. And I think that $2 trillion is a very reasonable number, and I could see it greatly exceeding that.
Big projections from Treasury.
$2 trillion extra pumping into the crypto market, and there's going to be, they can only cross on these blockchains and on using this distributed ledger technology, which means all of that gas fee that's going to be needed in order to pass through all of this wealth. So a couple things I wanted to show there. We had Danielle Dixon, CEO, Executive Director of Stellar, coming out saying Franklin Templeton is issuing money market funds and treasuries on the Stellar network, and you have Scott Bessent, the U.S. Secretary of the Treasury, saying that the crypto market cap is about to get increased by $2 trillion. So Thanks for tuning in to PNL, guys, and keep watching. Like and subscribe. Let me know what you guys think in the